Bull Market Bulletin.
Hey everyone, ready for another deep dive? We're tackling Bitcoin again today. It's been a wild ride for Bitcoin lately, wouldn't you say?
Definitely. Lots of ups and downs, lots of conflicting signals.
Exactly. And that's exactly what we're going to unpack today. We're going to be looking at a video analysis from January 8th, 2025. And, one of the things that really jumped out from this video is this weird paradox. On the one hand, we've got all these major institutions, like huge players like BlackRock getting into Bitcoin, pouring billions of dollars into it through ETFs.
Right.
But then on the other hand, the price is still kind of shaky. So what's the deal with that? What's going on?
Well, the video actually suggests something pretty interesting. It suggests that we might be witnessing a kind of global arms race for Bitcoin. Not just companies stacking sats, but entire nations getting in on the action.
Whoa, hold on. Countries battling it out to hoard Bitcoin. That sounds a little intense.
Yeah, it's a pretty wild thought.
Okay, but before we get too deep into that rabbit hole, let's take a step back. I think it's important to understand the bigger economic picture, right?
Absolutely. The video does a great job of setting the stage. For example, did you know the U.S. 10-year Treasury note is almost at 4.7%?
Okay, so what does that even mean for, normal people like me?
Well, it means rising interest rates. And rising interest rates mean things like, oh, I don't know, your mortgage rate could shoot up maybe even above 8%.
Ouch. Yeah, that's going to make buying a house or even getting a loan a lot harder.
Exactly. And the scary part is this is all uncharted territory. The expert in the video actually says the Federal Reserve might have lost control of the bond market, which, historically speaking, has never happened before. It's like nobody knows what's going to happen next.
I'm already nervous.
Yeah.
And they actually compared the bond market to a boa constrictor slowly squeezing the life out of the stock market.
Yeah, pretty dramatic, right?
Okay, so can you break that down for me a little? What does that actually mean for the stock market?
Well, for the first time in over 20 years, get this, the earnings from the S&P 500 are actually lower than the yield on those 10-year U.S. Treasury bonds.
Okay.
And that means that, for investors, bonds are starting to look like a safer bet than stocks, which is a big red flag. It could mean a stock market correction is coming, maybe even a full-blown crash.
Yikes. Okay, so if stocks are looking shaky, what does that mean for Bitcoin?
Well, that's where Bitcoin's connection to risk assets comes in. You see, the video shows how Bitcoin's price has been moving pretty much in sync with the NASDAQ lately.
So, if the stock market tanks...
Bitcoin's probably going down with it. Yep.
Okay, so that's the bad news. But I know the video also mentioned some good news for Bitcoin, right?
Yeah.
Some, positive signal.
Oh, yeah, for sure. One of the most exciting predictions came from Axel, the video's analyst. He thinks Bitcoin could reach $200,000 by the end of the year.
Wow, seriously. $200,000.
Yeah.
Okay, I'm listening.
And there's more. The video also pointed out that even with the recent price drops, about 90% of all the Bitcoin out there is still profitable. So, people are holding strong.
That's encouraging, but what about all this talk about institutions going crazy for Bitcoin? Everyone keeps saying it's like the new gold rush.
And the numbers back it up. BlackRock's Bitcoin ETF. It's already sitting on over $55 billion in assets. That's more than a gold ETF that's been around for over 20 years.
No way, so even gold is getting left behind.
Looks like it. And get this, in just the first 4 days of 2025, 7 different Bitcoin ETFs gobbled up 17,000 Bitcoin. That's 10 times the daily rate of new Bitcoin being created.
Wow. Okay, so it's not just BlackRock, it's everyone. It's like a feeding frenzy.
That's a good way to put it.
Yeah.
And when it comes to companies buying Bitcoin, the video called it a stacking spree.
Stacking spree. I like that. So who's leading the charge in this Bitcoin shopping spree?
We're talking big names. MicroStrategy, Fidelity, Tether. And get this, those corporate Bitcoin treasuries. They more than doubled last year, from 260,000 Bitcoin to almost 600,000.
Holy moly, that's a lot of Bitcoin.
It is, and here's the kicker. MicroStrategy and BlackRock. Together, they hold over 1 million Bitcoin.
1 million. That's insane. Okay, but it's not just the big companies, right? The video also mentioned something about miners holding onto their Bitcoin instead of selling it.
That's right. So miners are the ones who solve those complex math problems to verify transactions on the Bitcoin network.
Right, right.
And usually, they sell their Bitcoin to cover costs. But now, more and more of them are choosing to hold on to it.
Interesting. So you've got institutions pouring in billions, companies hoarding Bitcoin, and now miners are joining the party. It definitely sounds like a supply squeeze is coming, doesn't it?
All signs point to yes.
Yeah.
And that raises a big question. Could this scarcity, coupled with all this new demand, actually push Bitcoin away from those traditional risk assets and turn it into a safe haven? Like during a financial crisis.
That's a really interesting thought. But before we get too carried away with all the good vibes, the video also mentions something a little fishy going on with Binance, right? Something about market manipulation.
Yeah, they highlighted this massive transfer of Tether. It's a stablecoin pegged to the US dollar to the Binance exchange. We're talking $370 million worth.
Okay. And that's suspicious because...
Well, Tether has a bit of a controversial past. There have been accusations that they've been used to manipulate Bitcoin's price before.
Ah, I see. So are we looking at some shady business here, or is this just normal market stuff?
Tough to say for sure. But it's a good reminder that even though Bitcoin's technology is super innovative, the market around it is still prone to the same old tricks and manipulations. Okay, so this whole debt spiral thing sounds pretty scary. But what does it actually mean?
Right. Like the video mentioned the U.S. is kind of in a risky spot because of all its debt. What's the deal with that?
Well, think of it this way. The U.S. has a huge pile of debt.
Right.
And it just keeps growing. Why? Because the government spends more money than it takes in each year.
That's called a, what was it, budget deficit?
Exactly. Budget deficit. So to cover that deficit, the government has to borrow money. And they do that by selling bonds. Basically, they're like IOUs.
Yeah.
Promises to pay back the money with interest.
Okay, so the U.S. is selling these IOUs to borrow money, but how does that turn into, like, a spiral?
Well, here's the tricky part. When interest rates go up, like we were talking about earlier,
Right.
the cost of servicing that debt goes up too.
Right.
The government has to pay more just to cover the interest on its loans.
Mm-hmm.
And that can create this nasty cycle where they have to borrow even more money to pay off the interest, which leads to even more debt and even higher interest payments. It's a mess.
So it's like you're stuck on a treadmill, running faster and faster, but not actually getting anywhere.
Perfect analogy. And to make matters worse, the U.S. has a really high debt-to-GDP ratio. The amount of debt compared to the size of the economy.
Right.
Which basically means they're extra sensitive to these rising interest rates.
Yeah.
It's like walking a tightrope with a really heavy backpack.
So what happens if they can't keep up with those payments? Like, what if the U.S. defaults?
That's the doomsday scenario. And it could trigger a massive financial crisis. Investors would lose confidence, start dumping U.S. bonds, and then, well, interest rates would go through the roof. It would be really bad.
Okay, so a debt spiral is definitely something we want to avoid. But how does Bitcoin fit into all this? Like, could it actually benefit from this whole mess?
That's the million-dollar question. Some people think that, yeah, Bitcoin could actually come out ahead.
How so?
Well, Bitcoin is decentralized, right?
Yeah.
And it has a limited supply. So in a world where governments are printing money like crazy and traditional currencies are looking shaky, Bitcoin starts to look pretty good.
Like a safe haven.
Exactly. A hedge against inflation, a store of value that can't be messed with by governments. Kind of like digital gold.
Right, right. Didn't the video also say that Bitcoin's price has been following the stock market? That doesn't sound very safe haven-y.
True. It's correlated with those risk assets, like we talked about. So, yeah, if the stock market crashes, Bitcoin could take a hit too, even if there's a debt crisis happening at the same time.
So it's kind of a gamble. We don't know for sure which way it'll go.
Pretty much. Bitcoin is still a young asset, and we're all figuring this out as we go. But the video does make you think, what if Bitcoin could offer protection against those big systemic risks? It's an interesting idea.
Very interesting. Okay, so we've talked about the risks of a debt spiral and how Bitcoin might be affected. But let's switch gears a bit. Let's talk about all these big institutions suddenly jumping on the Bitcoin bandwagon. What's driving that?
Well, there are a few things going on. First off, I think institutions are finally starting to realize that Bitcoin is a legitimate asset class. It's not going away.
Yeah, the video really emphasized that with the whole BlackRock ETF thing.
Right. BlackRock manages trillions of dollars, and they're betting big on Bitcoin. That sends a strong signal to other institutions.
It's like if they're doing it, it must be okay, right?
Exactly. And then there's the whole inflation thing we've been talking about. People are worried about their money losing value, so they're looking for alternatives. And Bitcoin, with its limited supply, is starting to look pretty appealing.
The video mentioned MicroStrategy, right? They're buying tons of Bitcoin to protect themselves from inflation.
Yep. MicroStrategy has over 140,000 Bitcoins in their treasury now. They're basically saying, we trust Bitcoin more than we trust cash.
Interesting. So we've got institutions looking for growth, hedging against inflation. But what about regulations? Have those played a role in all of this?
Oh, definitely. Regulations are a big deal for institutions. They need clear rules and guidelines before they'll jump in with both feet.
The video mentioned that the SEC in the US has been dragging their feet on approving a spot Bitcoin ETF.
Yeah, that's been a major roadblock. But they have approved some futures-based ETFs recently.
So maybe they're finally starting to come around.
It's possible. And if regulations become more clear and favorable, well, I think we'll see even more institutions getting into Bitcoin.
Which could mean even more demand and higher prices.
Potentially, yeah.
But let's not forget about that Binance thing, right? The whole market manipulation question.
Right. That's definitely something to keep an eye on.
So what are some of the ways people manipulate the Bitcoin market?
Well, there's wash trading, where someone buys and sells the same asset at the same time to create fake volume and make it look more active than it really is.
Sneaky.
Sneaky. Then there's spoofing, where they place big buy or sell orders that they never intend to execute. That can trick people into thinking the price is moving in a certain direction.
Oh, wow.
And then, of course, there's the classic pump and dump. Hype up a coin with false information, get people to buy it, then sell it all and leave everyone else holding the bag.
So basically, it's all about tricking people and messing with the price.
Pretty much, yeah.
Yeah.
And while it's hard to say for sure if that's what happened with Binance and Tether, it's definitely something to be aware of.
Definitely. Okay, so we've talked about a lot of different aspects of Bitcoin today, but the big question on everyone's mind is, can it really be a safe haven asset?
That's the million-dollar question, isn't it? And honestly, there's no easy answer. There are good arguments on both sides.
Lay it on me. What are the arguments for Bitcoin as a safe haven?
Well, it's decentralized, it's got a limited supply, and it's censorship resistant. Governments can't just shut it down or seize your funds.
Right.
And some people point to things like the pandemic in 2020. You know, when there was all this global uncertainty, Bitcoin's price actually surged. So that kind of supports the safe haven idea.
Interesting.
Plus, you know, in a world where governments are printing money like crazy and inflation's a big concern,
Yeah.
Bitcoin starts to look like a pretty good way to protect your wealth.
Okay, that makes sense. But what are the arguments against Bitcoin as a safe haven?
Well, the biggest one is volatility. Bitcoin's price swings can be wild. It's not exactly the stability you'd look for in a safe haven. And the market's still relatively illiquid. It's not as easy to buy and sell Bitcoin as it is to trade something like gold.
I see. So it's a bit of a mixed bag.
Definitely. And ultimately, I think the answer to the safe haven question will depend on a lot of factors. How bad the crisis is, what central banks do, how regulations evolve.
It's like a giant puzzle with a bunch of missing pieces.
Exactly.
Yeah.
And we're all still trying to figure out how they fit together.
Okay, so we've really dug deep into Bitcoin today. Everything from, the global economy to institutions buying Bitcoin, even that whole Binance thing.
Yeah, a lot to process for sure. But that's Bitcoin for ya, always keeping us on our toes.
Right. So as we wrap this up, I want to make sure we're giving our listeners some actionable takeaways, things they can actually use on their Bitcoin journey.
Definitely. I think the biggest takeaway is that Bitcoin is not some kind of get-rich-quick scheme,
Right.
It's more like a marathon, not a sprint.
You got to be in it for the long haul.
Exactly. And the video we talked about today, it really emphasized the importance of understanding the fundamentals,
Yeah.
The tech behind Bitcoin, the economics of it all, the risks.
Definitely. Don't just jump in blindly because everyone else is.
Exactly. Do your own research, figure out what you believe in, and then make your own decisions.
Don't just follow the hype. And, something else the video mentioned that I thought was really important is having a strategy.
Oh, absolutely. You got to have a plan.
Like, why are you investing in Bitcoin? What are you hoping to get out of it? How long are you planning to hold? How much risk are you comfortable with?
All those questions are super important to consider before you put any money in.
And I think one piece of advice that everyone can benefit from is diversifying.
Absolutely. Don't put all your eggs in one basket, as they say.
Exactly. Spread your investments around. Have some Bitcoin, maybe some other crypto, some stocks, bonds, whatever fits your goals and risk tolerance.
And remember the golden rule of investing.
Which is?
Never invest more than you can afford to lose.
Word. Because Bitcoin can be volatile. You got to be prepared for the ups and the downs.
And don't panic sell if the price drops.
Yeah. Don't let your emotions get the best of you. Oh, and another thing the video mentioned was choosing the right exchanges and wallets. Places to buy and store your Bitcoin.
Oh, yeah, that's crucial. Do your research. Find platforms that have a good reputation for security and reliability.
Because there are a lot of scammers out there.
Yeah, unfortunately. Always double check those URLs, make sure you're on the right website, and never ever share your private keys with anyone.
Speaking of private keys, I think a lot of people don't really get how important those are.
They're like the keys to your Bitcoin kingdom.
If you lose them, you lose your Bitcoin, period. Know how to get it back.
So keep those private keys safe. Offline storage is best, like a hardware wallet or even a paper wallet.
Write them down, put them in a safe place, treat them like gold.
Exactly. And one last thing I want to emphasize is the importance of staying informed. The Bitcoin world moves fast. There's always something new happening.
So how do we keep up?
Well, there are tons of great resources out there. Websites, podcasts, newsletters, social media groups. Just find sources that you trust and that provide reliable information.
Don't rely on just one source, get different perspectives. And the video mentioned that engaging with the Bitcoin community can be really helpful.
Oh yeah, the community is amazing. It's full of passionate people from all walks of life. You can learn so much from them.
Attend conferences, join online forums, go to meetups.
It's a great way to stay connected and stay motivated.
So as we wrap up this deep dive into Bitcoin in 2025, what's the one thing you hope our listeners take away?
That Bitcoin is a powerful, world-changing technology, but it's not without risks. So be informed, be thoughtful, and make decisions that are right for you.
This deep dive has given you a glimpse into the incredible world of Bitcoin. You've learned about the opportunities, the risks, and the forces shaping its future.
And as you continue your Bitcoin journey, remember to stay curious, stay engaged,
And never stop learning.
Well said. Thanks for joining us for this deep dive.
We hope you enjoyed it, and remember, the future of finance, well, it's in your hands.
Bull Market Bulletin.